You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, there we go. Good afternoon. Welcome back. Today is Wednesday, 17th day of August, 2022. Thanks so much for joining us wherever you are, whoever you are. We're just glad to have you right here, right now. We do 2 live broadcasts each and every day. The first live broadcast is for members only and those taking our 1-week free trial. In a few minutes, Michael will show you exactly how you can take the free trial if you've never taken it. It gives you 5 consecutive days in our live training room. 5 consecutive days where we treat you just like a lifetime member. The only thing you don't have access to during those 5 days is the members only workshop on Thursday night. That's from 9:30 a.m. to 11:30 a.m. every trading day since 2008. We do a different type of broadcast in the afternoon, and that's the one you're tuned into right now, or listening to after the fact. In the morning broadcast, we're training, we're putting on, taking off trades, live in real time, whether it's Val or Michael, explaining every move they make, every trade they take, and the rule behind it. Not while you just sit and watch, but while you trade around with them in your simulator. You don't want to start trading live any strategy until you've proven to yourself that you understand the strategy and can execute it properly. So you start in the simulator until you qualify to go live. That means 10 consecutive days in a row where you reach your goal and 10 trades or less. Now, the afternoon broadcast is a recap of what happened that morning in the live training room, this morning in the live training room. The way to join the afternoon broadcast, you've got 2 options, one a little better than the other. If you go to our home site, cfrn.net. There's a big microphone on the right-hand side of the page. You can click that. You can go to Emini Trading School. You can go to mytradingiq.com. All of those have a link to the afternoon broadcast. You click the link, fill out a registration form, which will take about 30 seconds. And then every day going forward, you'll get an email right before the show starts, reminding you the show starts at noon. And when you're ready to join, all you have to do is click the link in the email, and it automatically logs you in. I say that's the better way because it gives you access to the question box so that you can ask questions and participate in the discussion. So you have 2 hours a day of live training, and then 1 to 2 hours every afternoon of what has happened, not only in the live training room, but over the past 24 hours with the Logic 247 alerts, the Concierge Trade alerts, and of course, you have access to the question box if you log in that way so that you can ask questions and be a part of the discussion. Garrett's going to join us today about 12:45 Eastern. He hasn't been on the show in a few weeks, and he just published a new edition of his newsletter, Observations. And so he's going to come on and talk a little bit about what he sees coming in the markets. It's always a pleasure to have him on the show. Now, on the days you're out of the office, away from your desktop, you still want to join the show live, not a problem. All you need is an internet-connected device. It could be your phone, your tablet, PC, a Mac, doesn't matter. It connects to the internet. Point the browser to youtube.com/CFRN. Easy to remember, youtube.com/CFRN. Not only do we simulcast the broadcast across both channels, both the GoTo platform and YouTube. On the YouTube channel, we actually archive each and every daily show, and currently there are over 2,000 daily live broadcasts archived for your educational and viewing pleasure. Especially helpful for those who are brand new to CFRN, gives you an opportunity to look back in time. What were we talking about and doing 6 weeks ago, 6 months ago, a year ago, 2 years ago? The underlying principles of the market haven't changed, and in that respect, neither have we. Because our indicators, our strategy, everything that we teach, everything that we offer is all built on the underlying principle of how markets work. So, let's open with a word of prayer as we do. Now, different states, different counties start school at different times. But for a lot of America, this week is back to school week. So we're going to pray for our children and for the school year ahead. Philippians 4:6 says, "Don't be anxious about anything, but in every situation, by prayer and petition, with thanksgiving, present your request to God, and the peace of God, which transcends all understanding, will guard your hearts and your minds in Christ Jesus." There is a lot of understandable anxiety and fear in the approach to the upcoming school year. Not only the potential for violence, but for what our children are now being taught. Government sanctioned. That's, I think, the really scary part. Because violence will pop up wherever it does. But some of the things being taught to our children right now, very far and wide reaching. And many of our younger children are being encouraged to take drugs that defy what's on their birth certificate. I won't get into all that. If you're a parent or a grandparent, you're already well aware, and your concerns are valid. Faculty, teachers, students, and parents all have questions, desires, and hope for safety after numerous tragedies last year. If we're not careful, our sinful imaginations can soar and create more and more worry. Today we're going to take time to pray for the upcoming school year. We can take great hope and peace in knowing that it is God who goes before us. He is in control, and we can fully trust Him. Heavenly Father, we know that you are still on the throne. You still reign. You care about every person on this planet. You have a plan even in the midst of our fears. We ask, Father, that you would go before this school year. We pray for preparedness like never before. for unity, for safe learning environments for our children, that truth be taught. We ask that you would transform the hearts and minds of those who are dealing with emotional struggles. Please give hope, peace, and joy to those who are suffering from fear, anxiety, and depression. Jesus, you are the healer. Would you heal the thought processes of those who are overcome by worry? Renew their mind with your word. We pray for courage and great faith to move past fears and continue the calling to education that you have given to so many. In Jesus' name we pray. Amen.
Amen.
All right, guys, let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow down 266 points, ahead of the Fed minutes coming out at 2 p.m. this afternoon. NASDAQ down 217 points, a little over 1.5%. S&P 500 down 45, a little over 1%. The Russell 2000, our man in the street, is down 43 points. That's a little over 2%. When we go to the charts, I'm going to show you why I titled today's episode with a potential 100-point drop in the S&P could be looming around the corner. In the commodity basket, crude oil up 31 cents, trading 86.84 last. Gold down $13.90, trading 17.75.70 last. Silver down 42 cents, trading 19.66 last. For silver, that's a drop of a little over 2%, almost $2,500 per contract traded. In the Asian markets at the close, Nikkei posted a gain of 353 points, 1.25%. Shanghai rose 14 points. The Hang Seng added 91. And in the European markets at the close, FTSE down 20. DAX down 283, which is a little over 2%. And the CAC down 64, just shy of 1%. So we had a green day in Asia. It was a red day for the UK. So far, it's a big red Radio Wednesday here in the US of A. So with that, we'll go to Michael to get a recap of what happened in the live training room. After that, I'll be back. We'll look at the logic alerts, the concierge trade alerts, and about 12:45 Eastern, Garrett's going to join us, and we're going to go over his last edition of Observations. Okay, Michael, I can see your charts.
All right. Here we go. Hang on. I'm getting the right one up here. There. Oops. There, this will work. Go to platforms. Here it is. And home. All right, I'm ready to go. It took me a second. Minimize that one. All right, here we go. Good afternoon, everyone. Today is Wednesday, the 17th day of August, 2022. All right, so if you've not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com, and right here, just click on this link, give the information, and you will be invited. You'll be sent an invitation to get into our room every business morning from 9:30 to 11:30 a.m. for 5 consecutive business days. Okay, that's all you got to do. Give us that information. Spreadsheet. If you are going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Yesterday, I was complaining that we hadn't had a $1,000 day in a while. We did it today. Almost had a $2,000 day. If you're going to read the spreadsheet, I already said that part. You got to read all that stuff down at the bottom. Today is the 17th day of August, 2022. We made 116 ticks in crude, 13 ticks in gold, and 32 ticks on the ES. That put us up 1690 on the morning session. Today took a minute and a trade to get to the goal for the day, just like yesterday. 1 minute, one trade, got the goal. All right. Today we took 27 trades in the room, and that put us at, on the month, $9,457 a contract, with 13 days averaging $727 per contract per 2-hour business day. On the year now, we've gotten our goal in 156 out of 156 days so far, and we've gone 217 days since our last negative day. That puts us at $162,436 on the year, averaging $1,041 per contract per 2-hour business day. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year you would have only had to work 25.8 hours and you'd have averaged $3,603 per hour. Okay, $3,603 per hour. Now let's get into the trades. All right, we only had one thing in the moment in time that we thought was going to happen, and it was right here. On the gold, we had our very first trade on gold was right here. We picked up 12 ticks on that. 6 ticks on the next trade to get us to 18. Then we stopped out, got us back down to 8, and we had a break even there, picked up 5 there to get us to 13. And right in here, this was our moment in time. I could only see down this far in the DOM, so I thought it was going to go that far. Then I looked left for price action, and I could see a little bit further. This level right here I had drawn in based upon just the leg length of the last move, because that's all the information that we had, and it went exactly down to that leg length. Okay, I thought it was going to go down, close down, move down, and that's exactly what it did. It really hasn't done much since then. I mean, this is a Z contract in gold. It's really not giving us a lot of opportunity lately. On the short side, there were no more trades in here, but let me just look at something else here. Yeah, that would have been okay. That would have been okay, and that would have been okay. Yeah, I'm working on something else that you guys will be able to see in the future. It's going to give you more opportunities off of the ribbon. Anyway, in this particular case right here, would have given you 3 more opportunities, all which would have been successful trades. And we didn't really get anything else on gold. All right, so on crude oil, we had most of our trades on crude. I'm going to come back to crude because that's where we had 116 ticks. We'll do the ES right now. We didn't have a ton of movement on the ES. We did get our goal on the first trade right here, right? On the ES, we picked up 8 ticks on that one. Then we had a break even there. Then we had 14 ticks on that to get us to 22. Okay, then we had a break even there, then a break even there, and we went from 22 to 26. We had 4 ticks there. Then we had a stop out, but it was only an 8 tick stop out that brought us down to 18. Then we got the 8 ticks back right there, brought us back to 26. Had two more ticks there to get us to 28. And then over here we went from 28 to 32, so we had 4 ticks there. During the break, well, we get into here, and there really wasn't that much more going on that you could have done based upon the information that you currently have, but you could have gone long. Based upon some new stuff that I'm working on. Trades through here, you would have had to have the slingshot be right. So there was only 1 trade in this leg down right here, which would have been right there. Okay, and on this move back up, you really didn't have anything. You just barely had blue off of blue right here. So you could have taken that right there for about 4 points, it looks like. But you just barely had the blue off of blue. All right, and we ended up with plus 32 ticks on the ES. Now, the crude oil, we had 2 30 tick trades on crude. That's where the majority of the points came from, or the ticks came from. But we still had a bunch of other ones. Our first trade here on crude was right there. We picked up 9 ticks. Then we picked up 30 ticks there. That got us to 39. At a break even, we picked up from 39. There's a stop out in here somewhere that I didn't write in, but I did. I think it was probably right here. Looks like probably right here. I think I stopped out because we went from 39 back down to 29. So I think it was right there that I stopped out. Went from 39 back down to 29. Then we had a break even. Went from 29 to 41. So we had a 12 tick trade. Then we went from 41 to 51. So we had a 10 tick trade, break even, then 51 to 60. So we had a 9 tick trade, then 60 to 70. So we had a 10 tick trade. And then I believe we had crude inventories come out here. Then I stopped out, went from 70 back down to 60. Then I had another 30 tick trade. That got me to 90. All right. And in here, I was saying that I think it was over here, I think, was it? Was it over here? It was over here. I was saying I think we're going to go down here during the break. I said I think we're going to move down here to 86.30. I think is what I said, right? So during the break, I wouldn't be surprised if we get down to 86.30. And so this is when this was happening in here. I said it wouldn't surprise me if we get all the way down there. So we got like a 60 tick potential trade here if it goes all the way down. But anyway, in here we went from 90 to 96. And right here we picked up another 20 ticks to get us to 116. Had a break even right there. During the break, it looks like there was a long right here. Oops, I mean a long right here. And nothing in there. A short right here that you could have taken. A short right in here you could have taken. A short right in here you could have taken. A short here you could have taken. And there you could have taken. It did get all the way down here to 30. And from there, it started to climb back up. And you had, well, a couple of spots you could have gone long. One right here, one right here. And that's about it. Okay, and that was it for the crude oil today. So we're plus 116 ticks this morning on crude. So it was a pretty good morning for crude oil. Crude oil. They call it in the South. It's oil. It's not oil. Anyway, today is the 17th day of August, 2022. If you're going to read this, you got to read all the CFTC risk disclosures down at the bottom. Made 116 ticks in crude, 13 ticks in gold, and 32 ticks on the ES. Put us at plus 1690 on the morning session. Today it took 1 minute and one trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 27 trades this morning. So on the month now, we're at $9,457. So with 13 trading days, averaging $727 per contract per 2-hour trading day. We have now got our goal on 156 out of 156 days, and we've gotten it on 207. That's on the year, and 217 consecutive business days. So on the year, that puts us at $162,436. So 156 days, averaging $1,041 per contract per 2-hour trading day. Okay. If you were to quit trading when you get your goal for the day, and you were to add one contract per month, you got to earn your way to that one contract. You got to earn $2,000 per contract per month to add another contract every month. If you were to do all that so far this year and quit when you get your goal, and your goal was only $100 a contract, then you would have only had to work 25.8 hours so far this year. I mean, the last 2 days you would have had to work 2 minutes, and you would have averaged $3,603 per contract. Okay. Now, if you have not taken a free trial with us, go here to mytradingiq.com, and right here, really check it out. There's not a lot of stuff on this webpage. All right. You go to platforms. If you have not downloaded any of our platforms, go here. There's instructions on everything. All right, with NinjaTrader, you're going to have to give us your machine ID. With DT Pro, you're going to have to tell us you did the download, and we'll give you an ID and password. The trade handout that I just went through, I didn't actually go through it, but the trade handout, the rules for the trade setups are right here. All right, you can download that if you want. Videos of all these trades that I've been taking. They're in here from the room in the morning. A bunch of videos in there, and back here to the home page. All right, that's where you go to take the free trial. Okay. All right. That we can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah, I'm ready.
Excellent. All right. Everybody that I have meetings with this afternoon, I'm going to send you all links right now. Okay.
Recap of the recap.
Today, 1 minute, one trade, $100 a contract.
Good job.
Thank you.
All right, guys, that's what happened the first 2 hours since the Wall Street opened this morning, 9:30 a.m. to 11:30 a.m. Eastern. And here's what's happened so far this week with a Logic 247. We're in week 211 since we introduced Logic 247. A typical week will issue 50 to 100 alerts. Market conditions have kept alerts at a minimum. We've issued a total of 9 alerts. On a typical week, we would issue more than that even on a Sunday night. But the markets, there's been a lot of sideways. Well, you'll see when we go to the charts. Out of the 9, 1 never triggered. We had 8 actionable alerts, of which 1 did get stopped out, which is 13% of the actionable alerts. Over the last 211 weeks, what we've averaged is 20% of all alerts do get stopped out, based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders. To get your passport, you go to eminifuturestrading.com. The passport never expires. It is for life. It gives you access to the live training room every trading day for 2 hours. You also have access to unlimited one-on-one mentoring. Our methodology, strategy, and the indicators we provide are fluid across all markets and all time frames. Not just futures, stocks, crypto, forex, because all markets operate under the same basic principle. Price moves from support to resistance, back to support, back to resistance, over and over, again and again. Now, when you get your passport, there's no upsells. There's no gotchas. There's no new shiny objects that you got to purchase every other week. The passport is your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. Now, along with the Logic 247 alerts, which are based on current price action and come out around the clock, we still have our original alert service, the concierge trade alerts. And if you want to grab a screenshot, you can, because we're going to walk through each of the individual markets as we do every day. Now, the CTAs, as opposed to coming out around the clock, are posted as a static report shortly after the Globex open. Last night it was 6:15 p.m. Eastern. CTAs are based on historic price action. Logic alerts are based on current price action. When current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. When the report is published, go to whatever markets you trade and make note of where price is at this moment in time. Using the ES as an example, when the report's published, you would draw a line in the sand at 43.17, and you draw a line in the sand at 42.99. Once these numbers are posted, if price starts trending up towards 43.17, that's bullish. So our strategy will look for opportunities to be long the market. If price starts trending down towards 42.99, that's bearish. So our strategy will look for opportunities to be short the market. In either case, that's where you use Logic 247 and everything you learn in the live training room every single day to yourself find opportunities to be long or short the market. Once you understand the strategy, most days you'll be able to reach your goal for the day before we even get to the CTA long trigger or the CTA short trigger. So there's the top half: ES, Dow, Russell, crude, NQ, gold, silver, euro, and bringing up the rear, bonds. Okay. All right, let's head to the daily chart. And again, Garrett's going to join us in about 15 minutes if he's on schedule. Here's the daily chart. Now, we highlighted this yesterday, posted charts in the Telegram discussion group. We had a high here where price got rejected, and then we got rejected here, and just barely breaking out of that little box that I drew, we've reversed back down to the 62% reverse fib. If we close the session below Monday's low, there's the potential for a 100-point drop back down to the daily BBC. Price always reverts to the mean. In our case, the mean is green, and the name we've given it is BBC. It simply stands for Bull Bear Cross. When price crosses below that green line, we anticipate lower prices. When price moves back above the green line, we anticipate higher prices. But no matter which direction you're moving in, price is always going to revert to the mean before it takes that next leg down. We bounced off the low of the session. So resistance is at today's high and then yesterday's high, 43.27.5. Support is at today's low, which is sitting right on top of the 62% fib. And as I mentioned in the live training room, here's Monday. The low of Monday was 42.49. Should we close today's session below Monday's low, then there's an open window of opportunity down to the 50% reverse fib and the daily BBC. When we drop to the BBC, we expect that to be support until proven otherwise. Just like when we're in a downtrend, price pulls up to the BBC, we expect that to be resistance until proven otherwise. Eventually, price is going to cross the BBC. And you'll have a heads up because blue and climbing here will turn to red and falling. Red and falling will turn to blue and climbing. Blue and climbing will turn to red and falling, and so on. So right now we're sitting on support times 3. Actually 4. Monday's low, the 62% reverse fib, the step line, the daily BBC, and the low of today, that actually makes 5. Okay. Now we've got the Fed minutes coming out at 2 p.m. Eastern. 2 FOMCs ago, the minutes produce more volatility than the actual Fed announcement did. So this afternoon at 2 p.m. Eastern, the best position you can be in is no position. Let the market absorb the information. Okay? We'll probably see spikes to the upside, spikes to the downside. Once the news is digested. And what we've seen lately is that initial impulse move will often continue into the close. So the Fed minutes are the only real possibility of pushing us up above yesterday's high. If we close up here, then we can make a run at the next major resistance area, which is 45.12. If things don't work out that way, then there's a big window of opportunity to fill right here, roughly 100 points. All right, on the S&P, this is a 30-minute chart. All alerts, both logic and 247, are based on the 30-minute chart. The indicators and all of the underlying principles, again, are fluid across all markets, all time frames. The vertical line separates today, Wednesday, from Tuesday, from Monday. As you can see on Monday, the market found resistance at the weekly zone. When price moves up to a zone, we expect resistance. And when price moves down to a zone, we expect support. Okay. So the short trigger last night on the S&P was 42.99. Now typically, once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So today's price action is a bit of an anomaly. Okay, we triggered once and ran straight to the target from the published entry to the published target. 42 points at $50 a point. It's $2,100 per contract traded. On the way down, we got a leg and a retracement. The pullback to the BVC held. It holds more often than it doesn't. And then we continued down to the zone. Now, red and falling and the step line have gotten directly below price. So we hit the BVC and begin another leg down. Make sure you monitor these two areas as potential support. If we trade back below red and falling, then we have a window of opportunity down to the zone, which is 42.57/58. Only three things happen at a weekly trading zone. The most common is consolidation. The second most likely is rejection. Third and least likely is the slice. Okay, so we're pulling up to the BVC. We expect it to be resistance. Okay, this looks like a very bullish move. We'll see what happens if we can close above the BVC and get above these highs right here. Then you have a window of opportunity back up to the zone at 43.02/03. We've published the zone since December 14th of 2009 for our members. So we have well over a decade of data that tells us how price behaves around the weekly trading zones. Once you embrace that and understand that, it will become one of the most powerful tools that you have in your trading toolbox. So from the published entry to the published target, a $2,000 per contract move. Go to the Dow. Here's where we opened. We could not take out yesterday's high. We get a bearish cross. Price comes down, consolidates for just a bit at the zone, and then we catch our first drop. 33,970 down to 33,952. 18 points, $5 a point. Price then gets back above the trigger and travels down to a low of 867. That's 100 points, $5 a point, $500 per contract traded. And then we pull back up to the zone, which we expect to be resistance, and the BVC, which we expect to be resistance. That gives us another trigger, and this time we travel all the way down to the weekly trading zone, which we expect to be support until proven otherwise. Look at how many hours we spent consolidating at the zone yesterday. Okay, we spiked the zone, now the pullback. We'll only consider short trades below the BVC, long trades above the BVC. The BVC has actually dropped below the short trigger. So we've got potential rejection here and potential support here. Again, the closer we get to the Fed announcement are the minutes from the Fed announcement. Best place for your mouse to be is any place other than in your hand. because weeks and months of hard work can get steamrolled very quickly. Make sure you never trade without a hard stop in place. It will bring you nothing but misery. So from 970 to 845, that's about 135 points. $5 a point, $675 per contract traded. On the Russell, market opened here, pulled up to the weekly zone, which we expect to be resistance till proven otherwise. And then the pullback to the VBC holds, sends us back to resistance. When the market finds resistance, it's going to go look for support. So down we come. Now here's one of these opportunities to more than get your goal for the day before we even get to the trigger. Okay. The published entry, 2013. The published target, 2003/04. That's the weekly zone. And as you can see, when the market got there, price bounced. So we had some consolidation, and now we've traveled to the next zone, okay, all the way down to 1986. This is a 10-point move, 9 points actually, because the zone is 2003/2004. So 9 points, $50 a point, $450 per contract traded. Once price got below the zone, then that opened the door to this move to the next zone. That's how price moves from zone to zone, back to the zone, and now down to this zone. Okay. And the Russell still has 2 more zones below it. Price is attempting to pull back to the BBC. A lot of selling pressure here. It would be very bullish if we were able to make it up, but that would be a counter trend trade. In the Logic 247 channel, there's over 11,500 individual alerts, but every one of them is a trend trade. There are no counter trend trades in all 11,500 plus alerts. Not that there's anything wrong with counter trend trading, but trend trading has a higher probability with lower risk because you got the big wind at your back. Learn the strategy, learn the methodology, get accomplished trading with the trend before you start to trade against the trend. Just a word of advice. So from 2013, we dropped all the way to a swing low here at 1976.50. And once you understand the methodology and strategy, then even though we hit the published target, there's no reason you couldn't take advantage of this nice move to the downside. Let price retrace. Make sure the BBC is going to hold as resistance. Might even spike up and touch the zone. That's when you'll look for another leg to the downside. The BBC is well below the short trigger. And so if price were to move back above the short trigger, then shorting at this point would be a counter trend trade. On the NQ, this is where we opened. We consolidated for many hours right at the weekly trading zone. And then we triggered and traveled all the way down to the target. So 634 minus 492. It's 142 points at $20 a point. That's a $2,840 move. What I've just shown you, just on the CTAs, is more than enough to pay for your passport. And that's just 1 day's trading. We've covered the S&P, the Dow, the Russell, the NQ. Let's go to crude oil. Crude has, even though we had inventory numbers today, we did spike up to the zone. This bearish cross was right at the zone. And so the energy that came out of the inventory numbers spiked it up to the zone, spiked it through a little bit, but not enough to trigger on the long side. And then price went right back to where it was. And that's typically what happens with these economic announcements. Price will get volatile during the announcement, right after the announcement, and then will most often end up back when the dust settles at where it was before the economic report came out. So no CTA trigger on the long or short side yet. All we did was reach up and confirm resistance at the zone and the previous bearish cross. Anytime you have a bearish cross that leads to an extended move, the first time price revisits that area, you expect it to be resistance. So we had a couple reasons, okay, not to buy into what was a big green candle for a few minutes. Let the candle close. These are 30-minute candles. And then plan your trade, okay? On go. Hello, Garrett.
Hi, Dwayne. Hey, I don't have an invite today. I don't know why. I don't see it in my email.
Okay, I'll ask Valerie to send you
Okay,
a link.
thank you.
It's the same link you used last time.
Yeah, I just didn't see it from, I usually look for the CFRN and I didn't see it. So maybe I can find an old one. Will that work?
Yeah.
Yeah, let me see if I can do that.
Okay.
Okay, thanks, Dwayne.
Okay. Back to gold. 1783. Again, once an alert triggers, there's a greater probability of it triggering multiple times. And here we go. 1783 down to 1780 and a half. So it's 2.5 points, $250 per contract traded. Then we get back above the trigger. Down we go again. This time, put in a low at 1779. $400 per contract traded. Back above the trigger. Pull back to the BBC holds. Holds more often than it doesn't. And then down we go to 1779.40. $360 per contract traded. And then back above the trigger. And this last trigger has taken us down to 1774. $900 per contract traded. And the target on every short alert, logic or CTA, the final trade to target on a short is the zone below. On a long, it's the zone above. Okay. Silver. Two-sided action on silver. Market opened here. We triggered 2020 and it took us up to 2024. Silver pays $100 for every 2 pennies of movement. Okay, so that's 4 pennies, $200 per contract traded. And then we trigger 96 down to 91, $250 per contract traded. Then back above the trigger. And the initial move took us down to 1974. 22 pennies, $1,100 per contract traded. Then we pull back to the BBC and we put in a low in the session of 1963. The euro. We barely stumbled over the short trigger. The euro has, for the most part, been flat and sideways. And bonds. Short trigger on bonds was 140.24, and the zone is 140.12/13. So we made it once, and then we reached up to the BBC. The pullback held. We touched the trigger, 140.24, and that took us back down to the target and to the zone below that. So we went from the entry to the target to the zone below, support, up to the BBC, and then all the way back down again. Now we've pulled back to the BBC again. So be on the lookout for an opportunity to trade, about 140.10 down to 140.01. Okay. All right. Again on the daily chart. We're off the low of the session. How the market reacts to the minutes is anybody's guess, and that's all it is. Nothing but a guess. Number one, you don't know what the minutes are going to say, and you don't know how the institutional traders who move price are going to react. All right, looks like Garrett found his way in. Let me open up your mic, Garrett. Okay, Garrett, you're still muted on your end. So if you unmute yourself, you can join the party.
Hi, Dwayne.
There you
Can
are.
you hear me?
Yep, I can hear you just fine.
Sorry, my timing was remarkable. I just spilled a glass of water all over myself on the floor, so I took a brief moment there. Anyway, I'm back and ready to go.
All right, I'm gonna send the screens over to you.
Okay, got some interesting stuff to share today. Let's see.
Well, we look forward to it. Okay, I can see your screens. I can see the triple Q daily chart.
I'll come back to that. I wanted to go here. I was, I don't know if you know Peter Eliades. Peter and I are old friends for...
Yeah, Peter was on the show.
Yeah, I thought he was. Yeah. Anyway, we commiserate with charts and stuff, and we were talking about cycles, and the interesting thing, he downloaded some daily data from the Foundation for the Study of Cycles that goes all the way back to the beginning of the stock market, which is incredible, which is what this chart is here. And those numbers on the bottom aren't dates, they're data points. You'll see the dates just under the heading at the top, and those are just reference points, and this goes up to this month. So, and of course it's logarithmic, otherwise the chart would be 10 stories tall.
Right.
But anyway, the point here is, here are the two most significant lows in the history of the country. I wouldn't have known. I mean, obviously 1932 would have been one, but the one prior to that was March of 1842. The prior depression. And then there were a number of depressions in here, but that was the significant one. And if you take the distance between these two, it's 1,084 months. Lindsay was a technical analyst, and he would amongst other things, he would do bottom to top counts. So he'd take a bottom like this one to this one, measure the distance, and extend that out to project where the next top might be. And I've done some of these probably on the show. They're interesting. One of three things can happen. You can get a bottom to top. This one, by the way, projects to November of this year. So if you go from here to here, it'll take you out to over here, which is November of this year. So the reality is one of three things. The idea is that it's a bottom to a top. So we could have a top in November. The other alternative, of course, is a bottom to bottom, which I think is what it might be. If it's going in, the third alternative is that it doesn't work out and it's meaningless. But the interesting thing is you get a lot of meaningful bottoms in years ending in 2. And the two most meaningful ones in our country's history happen to be with years ending in 2. And we might be projecting out for another one. Whether it'll be the most significant low or not, that's another question. But here implies that, maybe we can get a low here, and the way things are going, it looks like that could possibly be the case. The other thing I was going to show you, I don't know how much time we have, but maybe I can pull this over, see if you can you see that? Okay.
Yep. Mm-hmm.
This is 1942, and what I thought I'd do was take 1942 and measure from that low. By the way, this is like a 20-year cycle. Every 20 years, this is kind of interesting. Here's the projected low, and then you measure out 20 years, because they're obviously 20-year cycles are kind of a big deal. And then if we move forward, that's too slow. But if we move forward to the next 20 years, it comes up to 82. And look at that. It's like a week off. This is a weekly chart. And if you come out, it's going to project to 2002. Look at that one. You're pretty much, you're almost right on the money again. And now, excuse me, now if you come out again, I think it goes to, but here you are again, right around the end of this year. So the 20-year cycle is suggesting that. But I was using the big 40-year picture because we had a real meaningful low in 1942, and this huge rally up until 1966 followed that 42 low. So that's a big deal. And if you come over 40 years, because I know I've made this statement many times on this show, every 40 years or so, something bad happens. Every 80 years or so, something really bad happens. And what that means is that the depression low was 1933 when the bank closed. 40 years later was 1973 with Watergate. That ushered in the worst recession since the Great Depression in 73 and 74. You had a period of digestion of that debt where you had another serious recession from 81 to 82. And then from that 82 low, which is here, you had that huge move going up to 2000 and beyond. So this is what we measured from here to this low right here. And when we bring that out, once again, you hit the 2002 low, the October 2002 low, pretty much right on the nose. And then we come out again to 22. So anyway, I just wanted to point that out. In between those, the comment that I use, just so you're not having so that it's a workable phrase, is every 40 years or so something bad happens. Every 80 years or so something really bad happens. The real phrase should be every 40 years or so something bad happens. And this is what happened coming in the 40-year period that I'm talking about. From the depression low of 33 is 1973 here. Nixon was president. They had Watergate. But the market had come up here. And from this period forward, for about 10 years, you have a digestion period. Now we didn't get above the 1,000 level. This is the 1,000 level, this blue line on the Dow. We first came up to it in 66. We came up to it again. We got a little bit above it here, but we came right back down. Same thing here. This had been a barrier for 17 years. It finally broke out and stayed above in 83. But this period of digestion in between after that first 40 years of debt buildup is right here. And it's about a decade long. And you've got a serious recession and another serious recession. This one wasn't as bad as far as the correction. But it was worse in the sense that the newscasters were saying, they were expecting a depression. And that's the only other time that I recall when newscasters were actually saying, gee, we may be going into a depression. And part of the reason was the incredible inflation that happened from here during this period. And then, of course, interest rates got up over 20% in 1981. So, but then we broke out. So what you have is a 40-year period, about a 10-year digestion period, then you get another 40-year period. And so what you wind up with is this long wave cycle that's roughly 90 years. So if you take 90, and again, if you go back and look at that prior situation from 1842, to 1932 is 90 years, and 90 years from 1932 brings you right into now. And the first 40-year period of that we've already had. We had this serious recession. So unfortunately, the outlook that we would have is that the likelihood is that we have a depression. We're at the end or near the end of one of those 90-year cycles right now. So that's probably the important message. And then looking at this chart here, and then looking at the other ones where you see the cycles coming together, and now you also see, here, this is the S&P. I wanted to show this. And by the way, this is from yesterday. So what I was saying in my newsletter is we've come down and made this low in June, and we're coming up now to this tops line from the top back in July to the late March top, and we're approaching that line now, and we got right next to hitting this 200-day moving average. So it looks pretty toppy as far as the S&P is concerned. But then I went down to the Dow, and I thought, here's the same thing on the Dow. Here's the all-time high. Here's the secondary high. And we broke through that. This is yesterday's move. We closed above it the day before, just barely. And we're also above the 200-day moving average. So this is a breakout with two closes above this line. So that, in fact, is bullish until proven otherwise. Now,
right.
Today we're down, but we're not down as much as we were. And then the QQQs, the NASDAQ, is this chart here. And with respect to that, the high was over here in November, as I recall. But here is the probably the January high. Let me see. Actually, it's a December high, and then the January high right here. The QQQs were a little bit different, but drawing this trend line, this red line is a parallel to this low to low line, and we came up and broke through that. The black line is a low to low line from this actual lowest point here and paralleled off here, which catches these two tops, and we broke through that too. And we ran up yesterday to this upper channel right here. And so, I mean, that's bullish in the sense that it's a breakout, bearish in the sense that you've hit this upper channel here and probably aren't going to go vertical without a pretty good reason. You're below your 50% retracement, and you're below your 200-day moving average. So that would seem to be bullish on the breakout and kind of watch that. And these would tend to be periods where you'd expect resistance. But the market turned around today, and both the QQQs and the Dow were correcting along with the S&P. So it makes it kind of a mixed bag. We're as overbought on some of these. I mean, my daily and on my my hourlies and things like that. We're up in very overbought territory. And finally, I mean, during most of this year and much of the decline, a lot of the indicators were really mixed. And naturally, what you like to see is, if you're at a top and expecting top, you like to see pretty much everything you look at being overbought. And the RSI reading yesterday was 73. That's the first time it's got into an overbought reading zone since I believe it was November 8th. So it's been quite a while. So we're in there, and it looks like we're certainly in the neighborhood here where we're probably due for a correction. What do you think? How does it look on your end, Dwayne?
I think if we close below Monday's low today, we take about 100-point drop in the S&P E-mini.
Yeah, that's what I'm looking for. I'm looking for something like a 100-point drop in the S&P, and then probably due to seasonality and to the strength that this market's shown. This market, it's crazy. It's reminding me of the markets of 2020 and of last year, where you're looking at the markets, you're looking at the price action, and you're seeing what's going on and kind of wondering why. You know, when you look at, that's why nothing else matters other than price action. But, you know, when you look at economic, political, social, a lot of the things going on out there, you've got all sorts of negative things happening. So, excuse me 1 second. Bob,
Yeah,
I'm
go ahead.
doing an interview. Can I call you back? Thanks. Okay, I'm sorry. Excuse me.
No problem.
Anyway, yeah, that was, so that's pretty much all I had to say. It looks like we're in kind of a mixed bag on the short term. I think we're going to have Fed comments in another hour or so. And
2
it
p.m.
seems like
Eastern.
it seems like everybody in the world now is sitting there waiting to see what the Fed has to say before you can do anything. So, other than your program, of course, which you play them as they lie, you know, which I think is great. But anyway, that's all I wanted to share. I think that the big picture stuff is pretty important. And again, we've just got to wait and look at market prices and see what happens. I think we've got a fairly manipulated market, which might be an understatement, and maybe we've had one for quite a while. But if that of course is the case, then there's an agenda. so we have to see what goes on there. But I think it looks to me that if this market does rally into the Labor Day weekend, which is typical seasonality, that I do have a time date around mid-September, which is kind of odd, but anyway, that would carry things out a little bit longer if that time period turns out to be valid. But but you typically have very negative seasonality typically in September and certainly into October or beyond. And because we've gone up so sharply, it would appear that, you know, maybe that'll happen again this year, but we just kind of have to wait and see. So anyway.
Yeah, I'm not convinced the bull is back just yet.
Yeah, me neither. And there's so many things going on. I mean, to one degree or another, I imagine we're already engaged in the Ukrainian situation. You've got political, you go back 61 years and you had, Camelot, as they called America at the time. Everything was pretty wonderful in America. Kennedy was president. Both parties were conservative. And both parties, while they may have disagreements, they tended to be minor, and there seemed to be respect. And frankly, when one or the other candidates, I remember a great story about Ethel Merman, who was a big Nixon supporter. She was doing Broadway, and she was asked to sing at Kennedy's inaugural, and she shut down her play, which was Gypsy, I believe, and went to sing at Kennedy's inauguration, which just showed the maturity and where we were 61 years ago, as opposed to where we are now. And now I think that the political split in the country, just looking at things, is as bad or worse than it was during the Civil War. So we've got inflation higher than it's been in 40 years, and a lot of other stuff feeding into this, and kind of an illiquidity in a lot of ways. I mean, you can't fund debt forever without having something go pretty haywire, or maybe a lot of things. You certainly at some point begin to ruin your currency. The dollar's been strong vis-a-vis other currencies, but if you take a look at your purchasing power, it's it gets worse day after day. So anyhow, it's going to be interesting to see what happens in the next number of weeks.
Yes.
So
indeed.
Well, thank you,
Garrett.
Yeah. Thank you for letting me share my thoughts here, and best to all your listeners.
All right. Best to you. Thanks so much, Garrett.
Thank you, Dwayne.
Take care.
Okay. Bye.
And that brings us to our good word for the day. This is part 3 of how to handle disappointment. If you're going to be a trader, you better learn how to handle disappointment. Ecclesiastes 2:20. So I gave up in despair, questioning the value of all my hard work. There's probably no one in this audience that doesn't understand that on a very deep level. And there are many in this audience who have come out of that despair and no longer question the value of their hard work. Because instead of parlor tricks and circus acts, shining objects, they've actually learned how to read a chart and to understand not only how markets work, but that you have to embrace all possibilities and trade what's in front of you. Not what you think should happen, not what you wish should happen. Because the moment you say it can't go any higher, it will. And when you say it can't go any lower, it will. But again, those of you that have been around here for a while, you already know that. Whether you're disappointed in those you work with or the work you do, you won't succeed in life without the right people. But when the people you count on fail you, it's painful. Imagine Moses' disappointment. He leaves his brother Aaron in charge while he spends 40 days on Mount Sinai receiving the 10 Commandments. When he returns, what does he find? Israel worshiping a golden calf made by Aaron himself. When Moses needs him most, Aaron fails miserably. But watch Moses. True leadership shines in disappointment. He confronts Aaron, takes the mess to God, and prays for the forgiveness of Israel. God responds, then reminds Moses of his assignment. Exodus 32:34. Go lead the people. My angel will go before you. Disappointment doesn't cancel your assignment or God's presence. So do what God has told you to do. When you're disappointed in those you've poured your life into, let's check in again with Moses, founding pastor of the church in the wilderness. His congregation is made up of former slaves who have been delivered, blessed, and are en route to the promised land. However, they don't have a shred of loyalty or gratitude for the man who put everything on the line to make it possible. Fresh out of Egypt, they turn on Moses, accusing, blaming, and berating him. You can read about it in Exodus 14. Was Moses disappointed and hurt? Yes, he was. But each time he wanted to give up, he would discuss it with God, pray for his complaining flock, get fresh orders from headquarters, and follow them as he returned to work. That's what God called men and women do when they're disappointed and feel like giving up. And it's what you, my friend, must also do. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.